good relief on interest rates, which is pushing people back off the sidelines into the game. If you're solely waiting on interest rates to decrease to purchase, that's going to result in a higher price that you're going to have to pay for that property, and it's going to result in significantly more competition with your peers looking to buy. There's going to be more buyers and there's going to be controlled sellers, and you're going to see prices increasing, and you're going to see a very healthy, robust, exciting real estate environment that hopefully if you're a buyer you can get into before things get a little out of hand and you're having to compete with a crazy amount of money.
Welcome to Just Another Miami Real Estate Agent. My name is Anthony, and today I have a special guest. I wanted to create some content, especially going into the New Year's, regarding mortgages, especially when it comes to condos in Miami. We have a lot going on in regards to rates, prices, and condo reform. So I wanted to bring in a guest. This guy is somebody that I've been watching for a long time. He's been killing it on social media. He's the go-to guy when it comes to condos. Even though he doesn't just do condos, for me, he's the go-to guy when it comes to condos in Miami. He has over 250 five-star reviews. He's been in the game for over 8 years, and he also has his own book called The Modern Mortgage. My man, Yousif, how are you doing today?
Anthony, thank you for that intro, man. I'm doing amazing. Thanks for having me, and right back at you, man. I've been seeing you on social as well, looking to add value to your audience and to your clients. So props to you, man. Thanks for putting this together. Thanks.
Share what else people should know about you.
Yeah, for sure, man. Like Anthony said, I'm a mortgage lender based out of Miami, Florida. I've been doing this pretty much since I graduated college. I went to the University of Florida, so got to plug in my Gators, go Gators. Graduated 2015 and then hopped straight into mortgages from there. I've been with the same company here for 7 years. So I started 2 years with my previous company, SunTrust Mortgage, and now going on my 7th year here with Movement Mortgage. Like Anthony said, I specialize in condo financing, but of course we finance any residential lending needs that you guys have. We finance them here at Movement. And yeah, that's pretty much it.
All right, that's perfect, man. And I just want to let you guys know, if you're watching, this is not a drink. This is coffee. I just use this. I'm getting older. I don't drink that much anymore, so I use these glasses for coffee. All right, man, I want to jump right into it, man. So how would you describe the current market when it comes to Miami condos, considering the mortgage rates, the affordability, and the condo reform?
Yeah, good question. I mean, Miami's always been and always will be on the up and up. Demand is slowly but surely, especially seeing it now in 2024, increasing for several different reasons. Number one, we're seeing a bunch of different companies and sports teams and just snowbirds coming in and trying to touch base in and establish residency in South Florida, specifically Miami. But also, we're also starting to see some good relief on interest rates, which is pushing people back off the sidelines into the game. So combine that all with the fact that we're going to be seeing even more reduction in interest rates, we're going to see significant movement in the real estate market this year.
Yeah, speaking of interest rates, people are already saving if they were looking to buy from 3 months ago until now. So this year, interest rates are definitely going to be, or can't speculate too much, but we're expecting them to continue to go down. With that being said, we're professionals. We understand that mortgage rates fluctuate. What kind of recommendation would you give for buyers that's pretty much on the fence? A lot of people want to wait and see if mortgage rates go down lower. What do you recommend for those buyers?
You know, you always see this cliche on social media and on, realtors and lenders spitting it out saying, marry the home, date the rate. And although I don't try to use that cliche very often, it does resonate with me because of my experience in looking at so many different clients purchase, buy, and sell property. I think the most important part when it comes to real estate is to purchase the asset itself at the proper time in the proper way, because your appreciation is going to come from the property. So when you're putting 5% down on $1 million home, you're not getting appreciation on your $50,000 investment, you're getting appreciation on $1 million worth of real estate. So if you have a strategy or an outlook that's positive in terms of appreciation, the rate is important, but it shouldn't dictate how you buy or when you buy. Like you said, you can always refinance out of it, which will incur costs, and you have to build that cost into your analysis of the deal. But it's important to understand that if you're solely waiting on interest rates to decrease to purchase, that's going to result in a higher price that you're going to have to pay for that property, and it's going to result in significantly more competition with your peers looking to buy. So you want to make sure you run an analysis and say, it's okay to wait, but understand where you're going to be at versus where you're at now.
Right. Now I want to take a little bit of a shift. If people aren't aware, there are going to be some changes in regards to condos. There is a condo reform law changes happening after the Surfside condo building collapse. Are you seeing anything when it comes to these new condo reform laws?
There's definitely a lot more analysis that has to be done by a lender to finance in a condo building, because we're looking at things like special assessments or repairs a lot closer than we normally do. And also, there's reforms coming talking about reserve contributions having to be increased and things like that. What I will say is all these changes and reforms are good things. They're good things for us as professionals, and they're good things for the consumer. They give them more peace of mind, and they also give us the ability to shine as professionals because we really do understand these different nuances that are being applied. And they're being applied for specific reasons. They're being applied not just to protect the lender, but also to protect the borrowers as well and make sure they're buying into something that makes a lot of sense for them. So we've kind of been implementing these changes since the beginning of 2023 because our company does focus on condos and they do try to get ahead of any issues that may arise. But also our company gives us the ability to really skim down our requirements so we can get by with a lot of things that maybe some other bigger banks, some other more traditional lenders can't get by with these newer adjustments and newer changes and these more conservative approaches that big banks might take. We have a little bit more flexibility in how we're going to analyze, and we're going to do some make sense underwriting versus just some strict by the book. This has a special assessment, get out of here. This has pending repairs, get it out of here. We do rescue a lot of deals from these banks, and we anticipate rescuing a lot more of them moving forward with these additional changes.
As a real estate agent, I always say it's super important on who you pick as far as your mortgage partner, because buying a condo in Miami is different from most places in the country. These new laws are, making some changes, but we've already been dealing with this stuff. That's why I like you so much, is because you're putting a spotlight on the buildings that you guys already pre-approved. So that you already know which buildings shouldn't have any issues. And it's not just the down payment that we're looking at. People want to put down 3, 5, 10% down. We want to make sure that the health and the financials of that building is good. I know a lot of condo owners are not so happy when it comes to the fees. But overall, you're paying into your investment. You want to make sure that the building that you're in is safe. And when you are ready to sell it later on, you don't have these issues in the future. So 100% on board when it comes to this being necessary right now. In regards to condo fees, how do they typically affect the purchasing power of a buyer?
So just to rewind for a second and talk about condo fees in general, a lot of our clients, especially from out of state, they typically have qualms with HOA dues. Why are they so high? I want to buy in a building with low HOA dues and et cetera, which I totally understand. I personally was paying over $3,000 a month in HOA dues to the last condo I lived at. So I am no stranger to feeling that burn, trust me. And I've owned several different condos, bought and sold them in Brickell, so I know exactly how they work and how it looks like when they're coming out of your checking account. Nothing to undermine the actual dollar amount being spent, but it's important to understand what you're getting for those HOA dues. So understand that when you buy into a building, you're buying into security, staff, the maintenance of your unit in your building, utilities usually, you're buying into all the amenities. So translate all that stuff into what you have to pay at a single family home or a condo that has no association dues, to understand that this is not just a fee that's being arbitrarily put onto you. And I also encourage everybody who's looking to buy a condo or owns a condo, it's public information, the exact budget and where every single dollar goes to from your hard-earned money, what you're putting into your HOA dues. So look to see how much money is being allocated, and if you really want to, take a step further and get involved with your board or your association to really help dictate where that money goes and if there's increases or decreases to HOA dues. Because to Anthony's question, the impact of HOA dues is pretty significant on your approval because it comes in the same way as the mortgage payment, the same way as a car payment. It's a payment that we're going to have to build into your pre-approval and do a debt to income calculation. So when we run to see how much condo you can afford, if there's a big HOA due on there, even though you're not paying it to the mortgage company, we still have to add that as a liability. So it may push your approval up or down depending on your income and stuff like that. So definitely a significant part of the approval process is the HOA due.
And to go back a little bit in regards to, I mentioned the down payments. Typically, when it comes to the lender, they're going to run either a full or limited review. A lot of people don't understand what that means. Can you give a quick overview in regards to what a full and limited review is when it comes to buying a condo?
For sure. So whenever we look to approve a condo, we need to pull three documents: a condo questionnaire, a condo budget, and a condo master insurance policy. Once we look at these three documents, we're going to be able to determine if it's going to be a full review building or if it's going to be a limited review building. And the key differential between the two is a full review building is like three green lights. You've hit every single metric you need to hit to qualify for the best financing programs that the agencies have, Fannie Mae and Freddie Mac, which results in low down payments. You can do 3% down for a primary home, 10% down for a second home, or even 15% down for an investment property. Consequently, when we look at those three documents, if we have to label it as a limited review, that's two green lights and one yellow light. Still a great approval. It just means that there's something missing that Fannie Mae is okay with, but needs a higher down payment from the borrowers. So that means that in most cases, you'll be required to do a 10% down payment for a primary home and somewhere around a 25 or a 30% down payment for a second home or an investment property. And then typically the main reason why you're going to see a condo go from a full review to a limited review or vice versa is going to be how much they have kept in the reserve account. If they have a certain amount in reserves, that's typically going to give them the full review status. If they don't have as much as Fannie Mae asks for in the reserve account, they're probably going to be put into the limited review status and just require a little bit more money down from the borrowers.
And with the new condo reform laws, that should help with that as well. We should see a lot more buildings being able to pass that full review. Another question that I had in regards to prices and interest rates, are there any types of loan programs or special things that you guys are cooking up for people that's having a hard time with affordability?
Yeah, for sure. So lately we've realized that affordability is a big issue in terms of assets needed, but also qualification in general. And we've seen it become harder for everybody to qualify, specifically also self-employed individuals, because self-employed people typically we have to look at trends. And if a lot of them are trending downwards, like a lot of them are because of the way the market is and the economy has been, that usually disqualifies them from being able to purchase. So in terms of loan programs we've seen emerge, there's been a lot of cool programs that have popped up that have really helped fill the void with those different nuances, affordability and qualification. For example, with affordability, we love to work with first-time home buyers or specifically people who are looking for higher loan-to-value, lower down payment options because we love leveraging financing. Not just for any reason specific, but because we know that the less money you put down, the more money you can allocate to your next purchase and your next purchase and your next purchase. So me personally, I've bought and sold millions of dollars in real estate. I always try to take the highest loan to value I can because that gives me more liquidity to move on to other projects. So right now, you can be a first-time home buyer and buy a primary home for 3% down, but we also have a program called down payment assistance internal to our company that gives the borrower up to $8,000 back towards their closing cost and or their down payment. So that's been helping a lot of people cover some of their closing costs or pay some bills down and be able to increase their purchasing power. So down payment assistance has been around for a while, but having a program that's not hometown heroes or that's not external, but it's internal, helps us confirm the borrower can do this, helps us close them quickly, and makes it an efficient process. Down payment assistance would be the first program that we were seeing come up a lot more these days.
It being internal is a big deal because you get so many times where people are interested in the program, but then the lender doesn't work with it. So that's definitely a big deal. In regards to the broader economic landscape, there's a lot of they've been talking about a recession for some time now. Before the pandemic hit, I was with Keller Williams and they were preparing us for a slowdown. And then the pandemic hit and then it just went crazy. And ever since then, for the past couple of years, they've been saying it's going to be a recession. There's misconceptions when it comes to recessions. We always go back to 2008, but typically the housing market doesn't really suffer during recessions. Prices sometimes appreciate. So with the talks of a recession this year, what do you see happening, even if there is a recession this year?
Yeah, good question. And I'm still evolving in my perceptions of the future and adjusting with different pieces of information and different data points that I come across. But when I boil down the future of anything, and now that we're talking about real estate, when I boil down the future of real estate, I'm going to bring it down to the macro scale of supply and demand. I'm going to look to see where's supply at, where's it heading, where's demand at, and where is it heading. So I don't foresee any strong reason why there should be a housing crash or there should be a huge pullback in any way, shape, or form in the real estate market, simply because we have a considerable amount of pent-up demand and we have relatively controlled and lower supply. A lot of owners have held off on selling because they have really low rate mortgages already on their equity rich properties. So it's causing a little bit of a tough time. And we've seen it in our deals on a day-to-day basis. Sometimes we get to the finish line on a deal, and this has happened probably 10 times in the past 3 months, and the seller doesn't want to sell anymore. That we've got the client clear to close, closing package out, and is ready to go, and either their property's appreciated so much in the past 30 days of the contract where they don't want to sell it anymore, they feel like they can get more in the future, or they haven't been able to find anything to buy that's suitable for them because they know that if they want to buy something else, they're going to have to get a double interest rate. So if they have a 3% now, they're going to go into a 6% rate somewhere else. So we've seen deals fall out because of that. So the supply side is relatively controlled. The demand side, a lot of people are on the sidelines, man. It's crazy how many people that we have. We keep track of our pre-approved list, and typically we have about 200 people who are pre-approved of my clients that are out there shopping. And we divide them between shopping, offers out, or long term. And typically, most of them are shopping or their offers out, and some people go to long term. Right now, if I look at my CRM, significantly more than half our people are in long term because they started shopping, they started putting in offers, but then they decided that they're going to wait. They're going to wait for rates, they're going to wait for prices, they're going to wait for the new year, whatever it is they're going to wait for, they're going to wait for it. So here we have a situation where I assume my clientele is similar to the overall Miami buyers because we don't pick and choose. We work with everybody. So if that's the case, you have a lot of people who are approved, who have money, and who are ready to buy, they're just not ready to buy yet. So as soon as something happens, a catalyst or an opportunity presents itself, what's going to happen? People are going to start buying because they feel like the rates have hit where they want them to hit, the pricing is where they want them to be at, or the amount of time they spent waiting is enough time for them. They're like, I ran through a whole year cycle, I rented again, I don't want to do that for another year, so I'm tired of waiting. So given the fact that we have a good amount of pent-up demand, given the fact that there's no indication there's going to be a massive surplus of supply, it can only point to one direction, which is there's going to be more buyers and there's going to be controlled sellers, and you're going to see prices increasing, and you're going to see not a 2021 situation, but you're going to see a very healthy, robust, exciting real estate environment that hopefully if you're a buyer, you can get into before things get a little out of hand and you're having to compete with a crazy amount of people.
Yeah, I think this year is going to be interesting, with these rates going down. I'm not going to lie, last year I thought prices were going to come down a little bit with the rates going up, but that didn't happen. So, and the big thing with Miami is that I always thought that Miami was underpriced. I know people think that when it comes to prices, it's high, but when you think about what Miami is and just the things that's coming to it, I live in an area where downtown where Miami World Center is pretty much getting built up. And I lived on top of the Brightline station. And the way that has been getting built out over there and it's becoming a transit central, listen, I don't need a car. I get to walk everywhere I need, and it's just beautiful, especially when they compare it to other cities like New York. Dollar for dollar, I take Miami any day. You know what I'm saying?
Yeah. I mean, we've seen a lot of our clients in the past year or so coming from New York City and coming from LA. And I was in New York City just last week for a week, and I was in LA a few weeks ago. Well, just in December, I was in both of those cities because I love them both so much, and I have a lot of friends that live there. And obviously, number one, the state tax issue is huge. So people have a huge savings coming in here. But also, the quality of life is really not comparable. Whenever you're in New York City, Times Square, Central Park, it's amazing, it's fun, it's robust, it's exciting. Same thing with LA, the hustle and bustle of the city. You get something different down here. Here you get more quality of life. And if you're watching this and you live in one of those cities and you're thinking about investing in Miami, definitely urge you to obviously connect with Anthony and schedule some time to come down and check it out. Because I always want to come home whenever I'm on vacation. Not because I'm tired of my vacation, but because I know where I live. And it's more spaced out, it's more enjoyable, the weather's better, the economy is better, your tax rate's lower. That's why you're seeing, little by little, all these companies moving their headquarters to here. But eventually, it's going to be to the point where, right now you have a good savings. You can buy a 1-bedroom or a 2-bedroom at a decent price in a great area in Brickell downtown in comparison to other big metropolitan cities. In 2 or 3 years from now, most likely than not, prices in Miami are going to be higher than prices in New York and LA because Same thing, man, supply and demand. And make sure you're also predicting what's going to happen in the future instead of just waiting for it to happen, because you might not get in at the time you want to get in.
Yeah, especially, I mean, we've seen it during 2020. So many people were waiting,
Yeah.
and that was the best time to actually buy. You never know the
Mm.
best time to buy is. I always advocate
Mm.
the best time to buy is when you're financially ready. If you're ready to
Mm-hmm.
buy, go ahead and buy. You know what I'm saying? You keep
Yeah.
on waiting, you're going to miss out. You're
Yeah.
trying to wait for a better interest rate. It might not come, it might not be as significant as you thought, but then prices
Mm-hmm.
went up. You know what I'm saying? So if
Yeah.
you're ready to
Yeah.
buy,
Yeah. Yeah.
pull the trigger. Like you said, check out Miami. The big thing that you said is going on vacation and wanting to come back home. That's
Yeah.
that's a waiting. You're going to miss out. You're
Yeah.
trying to wait for a better interest rate. It might not come. It might not be as significant as you thought, but then prices
Mm-hmm.
went up. You know what I'm saying? So if
Yeah.
you're ready to
Yeah.
buy,
Yeah. Yeah.
pull the trigger. Like you said, check out Miami. The big thing that you said is going on vacation and wanting to come back home.
Yeah.
That's a key. That is a huge key. There's so many people from different places that go on vacation and dread coming back home. But in Miami, that is definitely not the case. When it comes to people getting ready to purchase a property, just in general, what do you recommend people do in regards to saving and getting their credit score to a certain point? I always tell people to improve their credit score to at least, or try to at least 720, and to save up as much money as they can for a down payment, because I want you to be able to comfortably make the payment and to be able to have money set aside for if something happens. So what would you recommend in regards to people looking to buy a property in Miami or just in general?
Yeah, great question, man. When we look at a person's profile for pre-approval, we're looking at three things. We're looking at credit, we're looking at income, and we're looking at assets. So before I even get into these, the most important point I can make is just connect with me or connect with any lender you want to work or you want to have a conversation with, because number one, it's free. And number two, if they're like me, they've spoken to thousands and thousands of people in your exact same position. So number one, they can apply a whole bunch of free knowledge and give you some good tips and tricks. But number two, if you apply for a pre-approval with a lender, yeah, they're going to run your credit, but you're going to get a great baseline of where you're at now and where you want to be if you're not there right now. So things like improving your credit, we can do that internally through a rapid rescore system we have. Things like assets, we have programs that can help with down payment assistance. Things like income, we have programs that can mitigate for low or no income. So the point of all that is, the sooner you connect with a lender, even if you're a year out, 2 years out, 5 years out from buying something, I love talking to people. That's my passion. I love connecting with them and figuring out where they're at, where they want to be, because I've built my wealth through real estate, and I've seen so many of my friends and family and clients make hundreds of thousands, if not millions of dollars with real estate. So being able to be a part of that is awesome, and starting from the very beginning is the most rewarding part. So outside of connecting with a lender, the things you can do to, number one, improve your credit, which 720 I think is a good mark. Anything above a 620 gets you into a conventional loan. Anything above a 720 will give you probably the best pricing. So the best way to do that is, number one, monitor your credit. Download an app like Credit Karma or whatever so you can know where you're at, and it'll give you some really cool tips. But the most important tip is keeping your utilization low. Make sure you're not utilizing a ton of your available credit. If you got a credit card for $1,000, that's all you got. You don't want to use more than $100 a month, and that's the reality of it. If you need to use more, get more credit cards, which sounds weird, but that's when the whole lender thing comes into play. So keep the utilization of your credit low, pay your stuff on time, stuff like that. But the most important part for credit is monitor it. Have something where you're seeing where you're at and where you want to go. When it comes to assets and saving up, that's pretty self-explanatory, but know how much you need, because a lot of people think they need a lot more than they actually do. So if you feel like you're saving up for 20% on a $500,000 house, that might take a lot longer than 3% down on a $500,000 house. And the results may be very similar, if not better, on the latter option. Just make sure you have enough money for your down payment. And also, part about assets that people might not realize is you have closing costs too. So make sure you're budgeting about, let's say, 3% of the value of a property for closing costs. So you're buying a $500K house, you need 3% down, 3% closing costs, you need about $30,000 can probably get you into that property. And then lastly, we talked about credit, we talked about assets, income. So income is going to be the most important part of your qualification, and we're going to look at a debt to income ratio. How much debt do you have divided by how much income do you make? So how we're going to calculate the income is going to differ from person to person, if they're self-employed or they have a salary, and how much debt you have is going to depend on person to person as well, how many payments are left, stuff like that. So the best thing to do with the income is let us know where you're at today, and then we can see, hey, you're good to go with what you need, or here's how we're going to get you to where you want to be with a cosigner, or with filing your income a little bit differently in the future, or with using a different program that takes into consideration different types of documents versus just your taxes, stuff like that. The sooner you get in contact with professionals like us, the sooner you'll be able to know where you're at and where you got to go, and it'll be super, super easy and simple because this is a plan we've put in place for tons and tons of people.
I think that a lot of people are afraid of wasting people's times, or they don't want to be sold to. Link up with somebody like Yousif that's going to actually work with you, that's looking to help you out. Talking to somebody is a lot better in most cases than just surfing the web and getting so much information on the internet. It's an information overload on the internet. People saying this and that. It's just good to be able to talk to somebody about your personal situation and set up a plan. I think that's the best thing to do, is to talk to a lender, somebody that's familiar with the actual area, to come up with a plan so a year from now or however long it takes, you'll be ready to buy that property. Man, it's been great. I hope we can do more of these and do some in person. And if there's anything that you want to share for people on how to contact you.
Yeah, for sure, man. First and foremost, thanks for sending this up. This is awesome. I hope people get value out of this. And anytime you guys want to connect with me, you can connect with me on Instagram at the Fit Lender. I'll respond to those every single day. I'll also make sure Anthony passes off my contact info, email, and cell number to you guys somewhere on his profile or somewhere on this video. That way you guys can reach out to me anytime. The way we've built up our business, me and my team, is just by connecting with people and doing good business with good people. So anything you guys need, we're a resource first and we're lenders second. I can't wait for my phone to ring and I hear, hey, I saw you on Anthony's podcast, or hey, Anthony sent me over, because that just warms my heart and it really puts us in a position to be able to help as many people as we possibly can. So don't be afraid to reach out. Don't be afraid to bother anybody. Our entire job from 8 a.m. to 7 p.m. Monday through Friday is just to talk to you people and to help you get to where you want to be with your real estate goals. So please reach out.